A man who invests in banks and has been doing so, by the way, for 20 years. In fact, the 20th anniversary of your big fund, and you're up over 20 years, 861%.
That's right. Seen a lot over those 20 years.
S&P up just a scant, I think, 280% in that time.
I think that's
so you've
correct.
made a lot of money for your investors and shareholders. Congratulations.
It's been a long run, and hopefully a lot longer to go.
Well, and a good run, and congrats on that. And you've done it buying really the small and mid-sized banks, not the J.P. Morgans of the world, the ones that we see on our street corners around our towns. How does this drop in rates affect them? You heard Wilfred's explanation, but what about the stocks?
Sure. The one thing he did leave off was mortgage fee income, because mortgage banking will pick up from a refi perspective in a lower rate environment. Also, credit quality continues to remain pretty good because there's less pressure on companies to meet, interest payments as rates drop. The consumer has more money in their pockets, so hopefully they can continue to go out and save and spend. So I think to some extent, lower rates, again, the shape of the curve will be important. It's important over time. It's not instantaneous. If you listen to companies at the Morgan Stanley Financial Conference yesterday, they talked about loan growth was good and, no big hit to earnings, at least in the near term.
So is it overly simplistic then just to say, okay, if interest rates fall, that's necessarily bad for mid-sized banks?
Yeah, I think if interest rates fall, it isn't necessarily bad for every mid-sized bank. It depends on the type of business they have. If they have mortgage business, certainly very helpful. Deposits have been rising very rapidly in something called deposit beta. Banks have had to pay up, matching what the Fed has done. And the last couple of rate rises, most banks really didn't get expanded margin. And so a little bit of drop in deposit costs is actually helpful. And we've seen that pressure off. We've seen Marcus for Goldman and Ally, some of the big wholesale deposit gatherers, start to lower rates. And I think it puts less pressure on lots of banks keeping.
So do you dive in then to the balance sheets of these banks and try to figure out who's got the heaviest mortgage book?
Well, that's part of it. Certainly on a short-term basis, you definitely do want to know who's got that, who's going to benefit. And then, of course, there's more arcane things like mortgage servicing rights and how those affect income statements. But yes, absolutely, mortgage business can be robust and refinance business can be robust.
And I know that I go back to Yadkin Financial. Yes. One of the reasons that your fund maybe is up 860% over 20 years, again, not too shabby, is that you're able to spot banks that get bought.
Right. Well, and this is an industry that is, basically, it was 15,000 banks in 1990. Today is a little over 5,000. I think this industry gets cut in half again over the next decade.
From 15 to 5 to 2,500.
Yeah, I think that's a reasonable assumption. And that
Why does a big
ways.
bank want a smaller bank?
The biggest of the big don't do it anymore because they've gotten the scale. But you look at that SunTrust BB&T merger of equals, where they save $1.6 billion. We put a multiple on that cost savings. The ability to reinvest in technology for them is really, really important. Scale does matter. I think at the end of the day, you end up with two types of banks. The Citibanks, J.P. Morgan, the really big, we can do everything for you. Mm-hmm. And then you've got the community bank that knows every one of its customers. The CEO knows everybody in its town.
Well, listen, obviously you made a lot of money for investors. Let's try to make some money for our viewers. Get through a few names. Veritex.
Sure.
And Ameris. Well, where they're coming up with these names, by the way.
Some consultant somewhere's made some money.
Somebody made the money. But you think you're going to make money for your shareholders on these two names?
Well, what's really interesting is Veritex's chief financial officer was Yadkin's chief financial officer.
Oh, so maybe a deal maker by nature.
I recognize, and by the way, he was at Green Bank, which got bought by Veritex. So there's a path to follow. Veritex is in Texas, so lots of good immigration of people to Texas, lots of good growth. Houston and Dallas, nice franchise. A lot of people would like that franchise. So they have optionality, which means they can make money for shareholders both ways. Fundamentally, and everybody probably liked that company. Ameris is really interesting because they're in Georgia and Florida, and they're just about to close a transaction. This has been announced. This is going to close probably later this month with a bank called Fidelity, and they have one of the nicest branch footprints in Atlanta. SunTrust leaving Atlanta. So, to join
just
up with BB&T.
Opening the door.
Yeah, it's just going to be a really growth market. Even a couple of crumbs falling off the table is going to be great for them. They traded about 7.5 times 20 earnings. This is a cheap stock.